Okay, real life traders, Friday. It is a Friday, October 20th. Uh, so 4 o'clock in the afternoon. Hope everybody had a good week of trading. I want to start. Let me get rid of this. We don't need to see the floating controls. All right. Just want to kick things off. I want to start by just sharing just a personal story and the reason I'm sharing it is regarding my trading plan and not just my plan, but just my philosophy in general about trading. And and also in the presentation that I do on becoming a consistently profitable trader, that I emphasize that you should not trade when you are not in the right mindset. That when you are trading, when you're putting money on the line, you should always be in the right mindset to do that. And what do I mean by that? Well, it says, so I can never trade again. Yeah, well, you're the exception to the rule. Okay. You've not been right for quite some time. So yeah, this doesn't apply to you. But for the rest of us, so I use the examples like if you have a fight with your spouse or significant other, right? And you're angry or you're upset or you're emotional, like, it's not a good time to trade. And the best thing to do is just to not trade that day. Or if you you went to an event the night before or had too much drink or just enough that you woke up the next morning a little hungover, again, probably not the best time to trade. You also don't want to trade when you're inebriated. So the point is that trading is, you can look at a chart. Wayne is keep going. He says, I remember when I had feelings and emotions. It's overrated. Yeah. So, but you can have the skills to be able to look at a chart and to do your technical analysis. But if you are emotionally compromised, you should not be putting money on the line because you're not going to be making sound decisions. And that's just something that I've always preached, and something that I emphasize when I'm, going through my workshops on creating a trading plan, or, the characteristics of a consistently profitable trader. So anyway, the reason I bring this up is personal example of that was, so when I said to Yates just a few minutes ago about, market being choppy, it's like, well, yesterday and today were, pretty trendy, right? And it's funny because I wasn't even thinking about it, because my association with the market was Wednesday. Well, I guess Monday, Tuesday, Wednesday. I did not trade at all yesterday or today. I had my screens open, kind of looking at them, but I didn't trade. I didn't take a single trade yesterday. I didn't take a single trade today. And the reason being, unfortunately, I had a very good friend of mine passed away Wednesday night of a massive heart attack. And so I spent a good part of the day yesterday with his wife. And then I went last night to JFK in New York City to pick up his daughter, who happens to be my wife, and I happen to be her godparents. And then today, I'm just like not in that right mindset. So I didn't take a single trade. So it was interesting when I made that comment to Yates about the market being choppy. It's because I was thinking about earlier in the week when I was trading. So, but anyway, all that said, it's, just sharing, my personal experience with knowing when not to trade. Right. And this is just a really good example. So anyway, that said, I will just say rest in peace, Scott Kempton. You were a great friend and you are going to be greatly missed. Okay. All that now aside, let's get into, yeah, thank you. Appreciate the words. Appreciate the condolences. It's always sad, right? And he was too young. He was 61 years old. That's way too young for, and with, two girls and his wife. And anyway, so all right, so let's get into a trade I did want to share with you, which was a trade I took on Wednesday, which was the last day that I traded. So, yeah, no, win, absolutely. Yep, don't mourn for him, celebrate his life and time on earth for sure, 100%. Yeah, as a matter of fact, his wife and I talked a lot about that yesterday. About and look, this is a guy, right? This is a guy who worked hard and played hard. He lived life to the fullest. And so she and I, it's interesting, she and I talked about it yesterday, and she's like, like he wouldn't want us sitting around here mourning him. He wouldn't want us sitting around being devastated by it. He would want us to celebrate him and his life and all the good that he did and all the lives that he touched. So I agree with you 100% there, Win. Yeah, so we will. We're gonna have a at some point celebration of life at some point. We're just not sure when. So anyway, so my trade on Wednesday was Roku, which again, just give me a quick one in the chat and confirm you are looking at that Roku chart right now. Yeah, cool. Okay. So let me just walk you through this trade, what I saw, how I ended up, taking it, and also more importantly, how I ended up exiting it. Okay. So here was Roku. Let me scroll back a little bit here so you can see this. So all right. So pre-market, right? You can see here pre-market, not a lot. Like, it's not like this was just like, rampaging pre-market. Let me just blow this up a little bit here, right? So not a ton pre-market. I mean, look, this, volume is pretty light here, right? If you look at it, but then on open, right, it just took a nosedive. And here's what caught my eye, right? And why I decided to try to trade it. So let me zoom into the chart here. Okay. So here was Wednesday's candle. Okay. This big one right here. Yeah. Awesome 10 EMA bearish. Absolutely. Yeah. So yeah, right here. Is that what you're talking about? That 3-minute candle right there. Yeah. So here was the look on the daily. Okay. Now we had a green candle, right? Here was the close, and here's the open, right? So the last time that I did this session with you on, analyzing price action and volume, right? Talked about how I showed you an amazing setup. And at the end, Al, you won the contest, and you got the right answer in terms of, did I or did I not take the trade? Well, the answer was I did not take the trade because it didn't meet my trading plan, because I cannot fade, meaning go the opposite direction of a gap and go. And on that particular day, it was a bearish gap and go. And the trade that I was looking to take was a bullish trade, but because of my rules, I couldn't take it, right? So just for clarification, here is a bullish candle, right? Here was a close, technically gapping down, right? But here's the thing. For me, I was able to take this trade because for me, the gap wasn't clearing the candle, right? Oh, okay. Yeah, Win says, by the way, thanks for that. I add that to my trading rules. Yeah, it's a pretty good rule, Win. I got to tell you, and look, it came from multiple losses, losing money time and time again, trying to fade gap and goes, right? Typically, it just doesn't work, right? The other day, I think it was NVIDIA. It just happened to be the trade that worked. But again, I'll pass on it every time because that's my trading plan. But on this particular day here, right? Yeah, we technically had a gap down, but it wasn't clearing this candle. So for me, that I can still fade that. Okay. So when I start to walk you through this trade, before anyone starts going, well, wait a minute, your trading plan says you can't fade gap and goes, technically for me, this was not a bearish gap and go because it did not clear this candle. Okay. So it opened up as an inside day. So I just wanted to make that understood before I get into the trade. Because again, I know that I'm a stickler for rules, and that rule that we talked about, I think it was on Tuesday, this past Tuesday, was that I can't fade gap and go. So anyway, it opened up here, started selling off. This line here is the daily 200 simple moving average. Okay. And I think, let me move this up here. Hang on. Let me just move this out of the way. Okay. So there's the daily 200 here, right? And it just rampaged right through that. But, okay, and here's the but. Here's what I'm looking at. The 200, I'm sorry, it's the weekly 50 right here. Okay. So this is if this is a daily chart right here, this jagged line is the next higher time frame for me. So that is that's because it's the color, the blue. I know it's the 50, but that's the weekly 50. And so price was coming into it at the time, right? Right into it. Let me actually move this up here so you can see it a little clearer, right? So here it is right here. So price was moving right into it at the time, coming right into it. And that's a big, big bearish candle, right? So I'm thinking to myself, just how I created my thesis for this trade and how I processed what was happening was, okay, it's pretty big sell-off, right? Right from the open, you can see this big sell-off, right? And it was coming right into this weekly 50, right? So price is just waterfalling right into it. And then look what happens. Let me zoom in here a little bit. Okay. So price comes down here and then boom, right? So you know what I'm looking for, right? You know, I'm looking for a hammer at the bottom of a move with a large volume spike, right? So here's the hammer, here's volume spike. Now, not textbook really for me, right? Because I think you know that the hammer I'm looking for really would be the body of the hammer would be here, and the wick would be way down here. But so location of the hammer, not ideal, right? I really would want to see it truly at the bottom, right? But I saw that, and I saw that volume. I'm like, all right, and it's right off. Think about where it's happening, right? That's part of this, is that it's happening right off that weekly 50 simple moving average. So for me, I go, well, I got to take that. I mean, that's, that is if this is going to bounce, that's the location, right? So that's what I'm thinking, that this is a great location for a bounce. After all that selling, that's where I can look to get in. So here's the 3-minute chart, right? So you get that candle. Let's go and take a look at it, see what it looked like on the 5-minute chart at the time. So zoom in here, right? So it's, I've got that hammer on the 3-minute. On the 5-minute here, right? On the 5-minute, I've got an indecision candle. I have a doji, right? So again, with the doji, with that kind of volume, the typical thinking with that is on a doji, whichever direction price goes off that doji is the direction that price is going to head, right? So, you're thinking about that. You can take the break above if price goes above the doji, then you should be going bullish. If it goes below the doji, then you should be looking to go bearish. Make sure I grab the right chart here. Let me go into here. So this is my 5-minute chart here. 5-minute chart, 15-minute chart. Let's go back here. Now, 15-minute chart. Yeah, so when really, I mean, yeah, I mean, to me, it's more of a doji, because the spinning top would have a body kind of like that, right? Spinning, okay, here's a good example of a spinning top, right? See how it's got a little bit more of a body to it than that? This is almost a perfect, let's see, the open and close, 63.78. The close was six. So it's almost a perfect doji, right? It's off by a penny, right? So a spinning top typically has a little bit of a body to it, right? Oh, I'm sorry. I'm sorry. You're saying no. I'm saying that the rules apply to the doji or high wave. Yeah. Exactly. Right. Yes, for sure. So whether it's a doji, whether it's a high wave, like I would, if I see some type of, and again on the volume here, right? So the volume is again the key thing, right? Is that or vice versa. So the volume is that key thing, especially like look at this volume again on the 5-minute chart, right? Volume stayed pretty steady. You get down here and it drops off, right? And then you get this candle here, right? And volume just spikes again, right? And it's right off that 50. So I'm thinking to myself, okay, red candle, right? Bearish candle with that volume spike. Hopefully that's capitulation. Hopefully that's exhaustion selling. Then you get this tiny little candle after it, right? So, and it's bullish, followed by the doji, right? So I like that overall, those 3 candles in a row, like I like that because I'm seeing, clear conviction and commitment to selling, followed by, maybe not, followed by, I don't really know, right? That's what that is. Don't really know. And then you get this candle here, right? And this candle, yep. So when saying, so you have absorption, which usually means reversal. Absolutely, right? Yep. So so all the selling is being absorbed here. That's what when is saying. Yep. And then of course the doji here is just pure indecision, right? Could go either way. So that's why when you look at this doji and you go, okay, well, if price goes bullish off that, that's the direction it's going to go. So that was kind of my thesis at the time. At the same time that this was happening here, 10 o'clock, this was happening, right? I'm like, all right. So if price goes above that, that's the direction price is going to go. Makes perfect sense. Doesn't mean it always has to work out exactly that way. I mean, nothing is ever definite. And if we're, we'd all be gazillionaires. But I've seen it happen enough that I know that typically that if price breaks above this doji or below, that's going to be the direction. So here's how I played it. Saw that doji. And again, I was looking at more on the 5-minute at this point. I mean, I looked at it on the 3, but the 5-minute, when I deferred to my larger time frames, right? The 5-minute, the 15-minute, I looked at that and I thought, okay, if that breaks above, and it did, right? This wasn't the best close. Like I would have loved to have seen this candle close at the top of the move here, right? If that had closed up here and held, that would have been an even better close. But I was like, you know what? I'm good with that. I'll take it. So here was my setup. I threw in a limit buying. I actually had put this in the chat during the room at the time. I think Dan was on the mic. But anyway, I threw this in the chat. So those of you who were there on Wednesday would have seen this. So I threw in my limit, but after this candle came in, I threw in my limit buy at 63.75, and I believe my stop was 63.25. I threw this line in. I'm pretty sure that was my stop at the time, or maybe it was 63.15. It was something like that. I don't have it in front of me, but I know that for sure my entry was 63.75 and my stop was somewhere down here. So next candle comes in and I get that entry, right? Let me go back to the 3-minute for a second, right? Just so you can see. Right? This was the candle that filled me. So looking at it on the 3-minute, okay, so price came up. So looking on the 3-minute, I needed, this is the candle that closed above this level, right? So I wanted to see the close above this hammer, right? So this hammer and that doji that on the 5-minute are, all working together here. So I wanted to see on the 3-minute the close above this candle. That's when I got it. So right away, I threw in I already had the order set up, right? So I'm not scrambling at this point to put together an order. I'd already planned this in advance and I had the order already set up and live, ready to go. I just had to click submit. So I click submit, price comes down here, triggers me in. The low of this candle was 63.70. And again, my entry was 63.75. So comes down here, hits it, and then right, and then follows it up with a little bit of a bearish candle and then a bullish candle. But just before I even go there, you should know this by now, right? What do you think I'm thinking of once I got filled on this candle? What do you think my next move is going to be? As soon as I can. Yep, I'm going to move up my stop. Absolutely. Where am I going to move it? I'm waiting. Bottom of the second candle. I'm not sure which is the second candle is, but I'll tell you where I'm going to move my stop is right under the candle that filled me, right? So when I go for these limit buys this way, right? So price is going against me. If I get filled with price going against me, I get filled and then it immediately goes my direction. So I end up with getting triggered into the trade on this beautiful long lower wick, right? As soon as I can, I'm moving my stop right below that wick. 2 candles to the left. The red candle, 2 candles to the left. This one. The red hammer. This one here. That one, I think it was, but yeah. Yeah, no, I'm going to go right below my entry, right? So because to me, the low of this candle, I see what you're saying, right? That could easily be it. But this was the candle that triggered me. And so to me, the bottom, the low of this candle, that's the line in the sand for me, right? So I'm thinking, so how I'm processing this is, there's definitely some lower wicks here, right? But this one is the one that triggered me. And so now when I'm looking at it, I'm like, okay, if this was where basically the bull stepped in and just would not let price go any lower, that's where my stop needs to go, right? As soon as I can get it there. And plus I'm also, aware that if that was the fill and then if this gets broken, if price just rolls, it's going to be running right at my 1R target, my stop here, right? So if price breaks and gets below this, like to me, this is that level that price should not get back below if it's going to go in my direction, if it's going to work, if the trade's going to work, should not get back below this level. So once I get triggered in on that, and again, it's those times that I end up with the perfect fill, and for all intents and purposes, this is right within 5 cents, right? It doesn't have to be right to the penny, but I mean, that's pretty good, right? So if I get that fill and I start getting movement in my direction, I'm getting my stop up here as quickly as I can. So that's what I did. I actually moved my stop on this candle right here. I moved my stop right here. So think about that, right? Because look, the week had been a little choppy, right? I don't know what's going to happen, but I do know that to me, as I already stated, that this candle should not get broken, right? That the trade is not going to work if that candle gets broken. So that's where my stop needs to go. So I move my stop up really quickly up to there. I figure worst case scenario, I'm losing like, 0.2 R. I'm okay with that, right? The name of the game is lose less than a full R. So if I can lose small, if I can lose 0.2, that's what I'm going to try to do. So move my stop up on this candle. Now, here's where it got really, really interesting. Here was, look at this volume, right? And that, again, so when I'm playing volume, right? When this volume comes into here, it catches my eye, right? But then when I get that kind of volume, now granted, also understand my target, right? I figured I was going for like a 3R move. My target was going to be, let me go back to the 5-minute chart for a second. Let me show you. My target was going to be, I think I was just going for somewhere in this neighborhood here. I think the high of this candle. I was just figuring, I didn't want to be at the high of the day, right? Again, if I'm going to get into this trade and it's going to run my direction, I think I was targeting like 3R, right? So it's probably looking for something right in that neighborhood right there. It's not what I wanted. So it's probably targeting something right in around here. Let's go actually, well, it doesn't matter because it didn't get there. But I was looking at a minimum of 3R on this trade, right? Because again, I'm not really expecting, unless the market started rampaging bullish, which actually for a period right through here, it did, and it was looking pretty good. But when this volume came in here, I was like, wait a minute, right? Again, you might think, great, it's a nice big candle with huge volume going my direction. But again, that kind of volume, right, in the middle, I might expect that at the top of the move. Again, if it's going to reverse, I might look for that. But that's just kind of just random huge volume right in the middle of what I want to be a long move. And so at that point, I'm like, okay, I'm going to be really, really tight with my, I'm going to be aggressive with taking profit. I'm not going to, because at this point, I could easily just have this turn around and go against me, right? So when I saw this volume come in, I actually went down into the 1-minute chart. Well, I'm not going to do it, but because the 1-minute chart's not going to go back far enough to Wednesday. But at that point, I was going into the 1-minute chart. I'm literally watching just the price action. And what was happening was price was, let me go back to the 3-minute. After this candle came in, right, and it got up here and I saw that volume, I'm like, that just doesn't look right to me, right? The location just seems wrong. Everything else looked great, like close above, here's VWAP, right? The orange kind of gold line here. Nice, well, not orange, yellow, gold, but nice close above VWAP. Just everything kind of looked great, but that volume is what spooked me, right? Yeah, yeah. Jeremy was probably closing his short positions at the time. So anyway, when that happened, I went into the 1-minute and I was watching the 1-minute, and price was hovering right around here, right around that 64.95 area, and could not go higher, right? And that's when I was like, you know what? I'm not going to give back. I mean, that was a pretty nice gain quickly. I'm like, I'm not going to give that back. So I have it set up where I can take a 90% partial, right? So those of you who are trading the funded account, you can tweak those settings. So I have mine set up so I can just one click of the button, I can take a 90% partial. And when I saw on the 1-minute chart after that volume spike like that, and it was struggling here to go higher, I was like, you know what? Just lock it in, right? I was at like 1.2R at the time. And that's, as you know, that 1.2 is the minimum amount that I look for when I'm going to take a trade. So I hit that button. I locked in the 1.2 and I'm like, okay, well, now I'll hold the 10%. I wasn't out the whole thing. I'll hold the 10% of it to see if it can get to 3R, right? And then if that happens, if it got all the way up here, maybe that 10% might increase my 1.2R to like maybe 1.6. I don't know. I'd have to do the math. But either way, that's what I did. And then it just came right back down on me. Let me go back to the 5-minute chart. All right. So 5-minute chart. I mean, I got that candle came in, right? So thankfully I hit that 10% partial, like right up in here, right around that 60. I think it was right that 64 95 area. Locked that in. Then I just sat back and I watched this come back down, right? And it came down here, it came right back down to my entry, kind of came back up. And then when it came back up here again, I was like, all right, let me just play around. If it's not going to move, I'm going to take off my 10%, which I ended up taking off that 10%, I think somewhere over in this area here. But this was more or less just intuition, right? And so it was just my gut feel for the way that this moved away from here and then threw in this huge volume spike. And then when it was struggling to go higher, sometimes do any of you, I'm curious, do any of you watch the level twos? So like, in Think or Swim here, you can watch the level twos so you can actually see the orders live, what's sitting out there and then what's actually printing. So anybody? So there are some people who just trade off of level two, believe it or not. I mean, you got to be able to process stuff really quickly the way that moves. But it's kind of the same concept, right? If you drill down into that 1 minute chart and you can, see how it's behaving and you kind of get a feel for it. And I just was like, it just struck me as I'm like, this is looking like it's going to roll over. So again, kind of just one of those things that a feel that you get, right, over a period of time of trading that I was just like, all right. So I was glad I did, locked it in. I ended up with 1.2R on the trade. Wasn't a great trade, right? But still 1.2, I'll take it. And then ultimately, I mean, look, if I hadn't done that, think about, right? If I hadn't been prepared to do that, at the very least, I could have had my stop here, which is where it initially was. And I would have lost on this candle here, I would have lost 1.2, right? I'm sorry, not 1.2. I would have lost like 0.2 R on this candle right here. But think about emotionally, right? Mentally, what does that do to you to get that kind of move? And then it come back down here, right? Get close to your stop, but not stop you out. Move back up, come back down, move back up. It's like, okay, all right, I'm going to get stopped out. I'm going to get stopped out. Okay, a little bit of hope. No, looks like I'm going to get stopped out. No, a little bit of help, a little bit of hope. And then, it's just like, it just messes with your mind, right? It just messes with your emotions. So I was glad to just lock in that profit again, even though it was just 1.2 and I was going for like 3, but whatever, I'll take it. So anyway, just wanted to share that with you. It was not a home run trade, but it was an okay trade. But I did want to just, that right there, right? You got to wonder, right? What was that about? Right in the middle of the move here, right? And also like, if you look here, it's not like there was anything over to the left here, right? Nothing over to the left here that would have indicated, some type of just like brick wall that would run into. So anyway, rolled over and ended up would have been a losing trade, but thankfully I did not let a winning trade turn into a losing trade. Right, let me remove some lines. Any thoughts on that? Comments, questions? Let me get a sip of water. Just let me know if you have anything on that. All right. So today, what was interesting, again, I didn't trade today for the reasons I already told you, but let me go into here. I did notice, so NVIDIA. So I'm curious, is there anybody in here new to real life trading who is not familiar with the 10 EMA strategy or not completely up to speed on the 10 EMA strategy? Let me know in the chat. Oh, Martina, you're not up to speed on the 10 EMA? No. Okay, cool. All right. Are you? So let me walk you through it. Just so by the way, first of all, if you want, we do have on the, if you go to your dashboard on real life trading, under resources, there is a whole thing there that you can download, but I'm going to walk you through, because I did notice today there were a couple of really nice 10 EMA setups. Okay. And this is, and this is the key. So so for instance, when I took over the mic and, Yates made the comment, he's like, oh no, yesterday and today were, nice trending days. That's the key to the 10 EMA strategy, right? It's a momentum strategy. So it works on trending days. That's the key to it, right? But on days where price isn't trending, where you're getting a lot of chop, that's where the 10 EMA strategy is also going to, chop you up, right? So days like today, it works really nicely. So let me just walk you through, Martina, real quick, the 10 EMA strategy. So the key to it here is you can do it on any time frame, but for day trading, mostly I use the 3-minute time frame for it. So here's a 3-minute chart, and the key to it, and here's a daily chart here, but I'm going to switch this over to a 3-minute. Okay. And let me zoom in here a little bit. All right. So the keys to the 10 EMA strategy, you want to have 2 3-minute charts set up. Okay. You need to, I'm not going to go into all the rules. So I'm going to have you, if you want, because there are rules about like where price opens, whether it breaks the high or the low of the previous day. But I won't get into all those nuts and bolts of it right now. But if you go to the resources and print it out, but I'm going to show you just the key things that you need to know. When a setup is, oh, thanks. When you are the best, throwing on the link to the PDF. Thank you, Win. But when a trade, when something is in play, right? So per the rules, like regarding the previous day's price action, right? If prices breaks above or below and it's in play, this is what you really want to focus on. So you want to have 2 charts, 2 3-minute charts, one with the pre-market on, which is why this area right here is grayed out, right? So that's, if I scroll back this way, you can see that's the pre-market from today. So pre-market on, pre-market off, right? So here's a 3-minute chart with the pre-market off. You want to have, so if you are going bearish in this case, right? So I'm looking for a bearish trade. You want to be looking for the first bullish candle that appears under the 10 EMA on both of these charts, right? Because again, sometimes you might get a bullish candle under the 10 EMA with the pre-market on, but then you look over here and that candle is not below the 10 EMA. So when you were looking to go bearish in this case, you want that bullish candle to be below the 10 EMA, and that's this red line here. Should have mentioned that. Oh, did he? Thanks, John. You're saying so he updated the strategy to just be extended hours on. So you don't have to have both anymore. That's what John's saying. Okay. So John's saying just with extended. Okay. Right here. Cool. Yeah. Previously we had to have pre-market on, pre-market off. So, but anyway, Martin, so what you're looking for is the first bearish, I'm sorry, if you're looking to go bearish here, once price gets below that 10 EMA, and again, this red line here, that's the 10 EMA. Once you get the price below that, you're looking for the first bullish candle under that 10 EMA. So here's the first one, right? And then all you're doing is you're taking a break below it, right? So set up your entry. Your entry would go below that bullish candle, and the stop, you want the stop to go above. Since you're going bearish, you want to find the bearish candle, right? That the price is actually above the 10 EMA, right? So on this, it's really this candle, or you could go here. They're pretty close. So anyway, let's say that's your stop somewhere up there, right? So the 10 EMA, if you're going bearish, you're looking for the bear candle that does have price on the other side, in this case on the bullish side of the 10 EMA, and that's where you put your stop, above this candle, right? But since these two are pretty close, anyway, somewhere in here, but technically above this candle. So that's it. And then all you're doing is you are taking a break below this candle. So this candle right here, there you go. There's your trigger, right? That would have triggered you into the trade. Now you're in, and then there you go. So this, and this would have, depending on how you played it, right? So a lot of times with the 10 EMA strategy, you're just targeting, 1.2 or 1.4, but you can target whatever you want, right? So if you say, well, I'm going to go for a 2R, but if we just look at this and we go, okay, 3-minute chart, right? Entry here, let me color code this so it's a little more clear, right? So 10 EMA, there's another rule, but it doesn't really apply here, that like, let's say if you had this green candle, but then you got another green candle like we did here, but the low of it is up here, you can actually move your entry up. But the low of this was pretty close to low. Let's see what they were. Low 419.61, and the low here 419.57. So pretty close, right? You wouldn't be make any sense to move by a couple pennies, right? But let's say if this next candle, let's say the low was up here where my cursor is, well, then you can move your entry up on that, okay? But so pretty nice setup, right? You can look at that and go, okay, triggered, and then it just rolled. Now, when I said, okay, well, you can target 1.2, 1.4, 2R, whatever you want, but let's just walk through a potential thing here. Let's say you say, okay, well, I'm going to, get in this and I want to ride it for as far as I can, right? So let's just see if you got into that and then you went and then applied the 5-minute 2-bar trailing stop that we've talked about, right? So this candle is the one that you would have gotten triggered in on right here. And you can see the strategy is actually applicable here on the 5-minute as well, right? Because here's that first 5-minute candle below the 10 EMA. You took the break below it. So this candle triggers you in. And let's say once price starts moving your direction, right? So on this candle here, if you counted back, so again, the key to the trailing stop is that when we're going bearish here, we have to continue making a series of lower lows and lower highs, right? So let's say this candle comes in here, right? So this price, starts moving your direction, or maybe you decide to wait until this candle because this really, wasn't that strong of a close compared to this one, right? Because of the lower wick, a lot of buying pressure. So let's say you decide to wait until this candle comes in. When this candle comes in, you're like, all right, I feel pretty confident that price is going to go my direction. Well, this candle made a lower low compared to this. This one made a lower low compared to this. And this candle was a lower low and lower high compared to this one, which triggered you in. So on this candle, count back 2. Now you can move your stop right to here, right? And look what you did. You got triggered in here, and then 1, 2, and 3 candles, you've already moved your stop pretty close to break even, but your loss at that point, if it reversed on you, would be minimal, right? You can see that. Next candle comes in. Now you move your stop. Count back 2. Now your stop is basically a break even. Yeah. You go green no matter what, is what Wynn's saying. Yeah. So the goal here is to get your stop to break even as quickly as possible without risking getting wicked out of the trade, right? Or getting, having prices reverse. So the 5 minute seems to be the best time frame I've found where it gives you just enough wiggle room so that you don't get taken out of the trade, too quickly. So on this candle, count back 2, you're here. This candle comes in, right? Now you move your stop down here. Next candle, you would, again, it's continuing to make a series of lower lows, lower highs, right? And then finally we get down into this candle, this red one here, count back 2, your stop is here, right? Then we get down to this. Now, this is going to be curious. So the low of this bearish candle, yep. So 410.81, and the low of this one here, 410.78. When saying, do I have notifications or hard stop limits? So when I literally, so my stop is a hard stop that I just keep moving down. When I'm doing this, it's not based off of notifications. I'm literally, yeah. So So to answer your question, when I place my order always, when I put in an order, always has my entry, my stop, and a target, right? So it's a bracket order that has all 3 components. As soon as that order is triggered and I'm in the trade, then my target and my stop are connected, right? It's a bracket, OCO bracket. One cancels other. They're tied together. So, okay. Yeah. Yep. Sure. So, and again, and Martina, this 2-bar trailing stop, you're not going to find in that. This is just, how I trail my price action. So if you look at this candle here, it did make a lower low and a lower high compared to this one. So you count back 2, 1, 2, and now your stop is, right here, right? And then what happens? Well, then you get taken out on this one here, right? So in this case, it basically probably ended up being a 1.2 trade anyway in this particular case. But I've shown you plenty of examples where you see that, price will just sometimes using that 5 minute 2-bar trailing stop, like you can continue running with letting price run for you and then easily get to like 3R. But on this one, so once this candle came in and then you count back 2, 1, 2, and your stop is here, right? Price didn't continue going lower, and then either this candle or this candle certainly would have probably taken it, if not definitely this one, right? So anyway, it would have been a nice, 1.2R trade, but so you can either just go, just going to go into when you're talking about this 10 EMA strategy, you can just go into it saying, well, I'm just going to target 1.2R, or you can apply the 2-bar trailing stop and then see if you can get, let it run past that 1.2R. And oftentimes it does, right? You get rid of this. So another example, let's go to Tesla. Zoom in here. So here on Tesla, okay. So when you're looking here on and I'm just curious, I know that John is saying that that's a 15-minute chart. Wait, let me go back. Here, 3-minute. That's what I want. All right, 3-minute chart. So, and again, Martina, you can do the 10 EMA strategy on any time frame. It works on all time frames. Typically, though, intraday, like day trading, I like to use the 3-minute, and that's what it was initially when Jeremy developed it. It was initially just on that 3-minute, and then he expanded it to the others. So looking at this, right? So first 3-minute candle. So here's price action, right? Here's again, this red line is the 10 EMA. It's interesting. Technically this candle, right? But I mean, that's a weird candle. I don't know that I would have, I don't know. That's just a odd candle, right? And price is actually above and it's below, but it closed below. I really probably would have defaulted to, looks like a trim. It does look like a trim now. Yeah. I would have defaulted to just waiting for this, right? So here's your, let's say this is the first candle, right? So if you look at this, your first candle here, your entry would go below that, right? So, and again, with Tesla, I like to give it a little bit of room. So I don't know, entry here. Now, stop wise, right? So technically you're looking for a red candle, right? And this is where I'll take a little bit of liberty with strategies. Even though it's like, okay, per the strategy, this is the candle where my stop would have to go above, right? Up here. But I look at that and I go, well, wait a minute. This candle right here is odd looking at as it is. That right there clearly showing me, if you look at the high of this candle, right? And then you look left, I mean, it definitely is, you can see it's basically where this candle stopped, where this candle, high this. I mean, if you look, it clearly is a level. So I probably would have just gone above, like right here with my stop there. So entry below this candle, stop here, and then you get triggered into it right here, right? So in this candle, you get triggered in. Now at this point, again, this is the 3-minute chart. At this point, I then go to the 5-minute chart, and that's where I'm going to manage the trade. So I get triggered in, and then I probably on this candle right here, going my direction, that's when I would start counting back 2. 1, 2. That's a little too aggressive for me right away. So I probably would have gone here after this candle. I probably would have gone right here with my stop, right? Counting back 2 off of this, 1, 2. I don't know. That's you get, especially with Tesla, right? Tesla can easily throw in, a candle, just throwing a wick right up into this level right here quickly, take you out, and then go your direction. So it probably would have gone here with my stop. But then once this candle came in, then I would have brought that stop down into here, right? So actually, let me make this green so that we know that was my initial entry, right? So on this candle, definitely would have probably then gone right where the purple line is here, somewhere there with my stop. All right, so now we need a lower low and a lower high compared to this one, and we get it here, right? Count back 2, 1, 2. Well, again, pretty close, but I don't know, maybe just to play it, say maybe I go here. At that point, I've got a free trade. Yeah, so so Martina, when I'm using the 10 EMA strategy, do I look for the volume spikes and all the other things that you're analyzing pricing? For sure, yes. But I will look for them for clues of a reversal, right? Because I'm entering this trade differently than I would enter when I am using like a volume spike on a hammer candle, right? I'm entering at a different part in the price movement, right? So usually if I'm looking to go bullish on a hammer candle at the bottom of a move, right? I'm at the bottom of the move. Here with the 10 EMA strategy, you're getting into it hopefully when the momentum is starting to pick up. So it's like at the middle of the move or close to the top or close to the bottom, but it's not the top or the bottom, which I'm usually looking at. But I will to answer your question, I will pay close attention to the volume. So for instance, let's say if I got into the trade here and then it came down here and this is a new low, right? Obviously here, and suddenly I get a hammer candle with a big volume spike. Well, that is going to then probably make me really tighten up my stop, right? I'm just gonna be aware of that because again, I'm already in the trade, but that might be let's say if I got into that trade this based on the 10 EMA, and it only got down to here, and suddenly it's making a new low, and I'm getting that, but then maybe I might start thinking flip, right? Yeah. So when, if on using this 10, that hammer, yeah. So using that 2-bar trailing stop, right? It doesn't have to be the whole, when I'm using that 10 EMA trailing stop, right? At that point, I'm trailing, right? It's not like that when I'm talking about moving the stop, when I have a candle, when price is going to get, I'm talking when, if it's up in here, right? But once price is in my direction, in my favor, right? I can move my stop on any candle. It doesn't matter. I know what you're saying. You typically, like, if price goes against me, right? Like, let's say I got into the trade here and price went against me, then I would have to wait. I'm going bearish here. I would have to wait for a bearish candle to move my stop, right? That's what you're saying, which is correct. That's if price goes against me, right? But if price goes in my favor, right? If price is in my favor, I'm moving I don't care. And if I'm using the 2-bar trailing stop on the 5-minute, doesn't matter to me what color it is, as long as it's making lower lows and lower highs, right? I can move my stop. So technically, like this candle, what was the high of this? 215.27, 215.30. So technically, right, this candle right here, it's a bullish candle. It made a lower low and a lower high compared to this one. So technically, after this one, my stop goes above this candle, right? Yeah, it's a green candle, but it's below, right? Here's my entry. It's below my entry. So once price is in my favor, I'm the whole green, red, white, black doesn't matter. It's just as long as it's making lower lows and lower highs. Cool. So let's see, we got one more minute before Robert Thompson is coming in. So anyway, just looking at this, right, you can see how, right, this candle comes in, lower low, lower high, your stop is here, and you just keep going on down. So if I come all the way down here to the bottom, right, and on this candle, right, I get a lower low, lower high compared to this one, go up 2, right? Now my stop is above this candle, and then, yeah, I would have gotten taken out here, right? And then you look at that and go, okay, well, again, it's probably about a 1.2. So, but again, sometimes the key benefit to this 2-bar trailing stop is if you do get caught in a trade that just is running, right? Just running, and it's happened where price just keeps going in your favor, right? This will just keep you in the trade for a very long time. So, but it doesn't mean, again, it doesn't mean that you don't take or you can't take partials. Absolutely, right? I'm not saying to, just be like, all right, I'm just going to let it run. I'm not going to, no, for sure. I take partials, and, I want to lock in profit, right? I want to lock in. So I'll decide when I get into the trade, right, at what levels I'm going to take some partials, but I do want to always hold something to see if it can keep running. Jerome says, do I use the 10 EMA strategy all the time? Not all the time, Jerome, but I use it. Like if something catches, if I'm watching, if I see it setting up, right, then yeah, for sure. But is he on host and panel? Let me see. Oh, I'm sorry. Yep. Jerome. Yeah, Jerome is on host and panel. Jerome, if you want to change that to all, so everyone can see your question. But so Jerome had asked, do I use the 10 EMA strategy all the time? Not all the time. So Jerome, as I mentioned, because it's a momentum strategy, I want to use it on trending days. So for instance, on an inside day when you're getting a lot of chop, I'm likely not going to use it. I'm probably going to rely more on my other strategy of looking for hammers and shooting stars with volume spikes. So, all right, let me see if Robert is here. I believe he should be. Let me go back. Yeah, Robert is here. Let me make you host. All right. Robert is host. I want to thank everyone for your time today. Have a great weekend, and I will see you next week. I'm going to stop the recording, stop my share.